I see this $13 million business mistake all the time. Let me set the table. A friend of mine owns a successful blue-collar business, one that he's spent 2 decades building. Good news, sold this business for a life-changing amount of money, $24,500,000. But I'm going to show you the trap the vast majority of business owners fall into. And I get it. No one teaches you this. There's no playbook. You've never done this before. Give me a few more minutes and I will show you how to add millions to your sales price. That same mistake my friend made that cost him $13 million doesn't have to be you. Why listen to me? Well, business owners that I work with get emails like this all the time. And chances are you've probably gotten one of these. What do these emails really look like? I'll read you one directly from my inbox. Title, A Quiet Inquiry About Your Business. And here's what the body reads. Hope you're off to a great start to 2026. I want to let you know that I've been contacted by a buyer that is well capitalized, acquisition ready, and actively searching for a business that aligns with your company's profile. Based on what I know about Moment Private Wealth, your business may be a strong fit for acquisition. Chances are, if you own a business, you've gotten emails like this. What do they really mean, and are they really a trap? My friend got one of these emails, and the first thing that he did was ignore them. He ignored them, and ignored them, and ignored them, and then he got a little bit worn down. He had a bad week, and he thought, it would really be nice to have somebody else helping me in this business. So he responded to one of the emails, and that firm reached out to him. He started the dialogue. Right after he started having that dialogue, he reached out to me to tell me, I'm having this dialogue with this private equity firm. I'm really excited about it. They're being really, really nice to me. They're really great people. And there's a bunch of really great people in private equity. But my encouragement to him and my encouragement to you watching this video is that you need to be wary and you need to understand what are the intentions of these emails. And when you take a meeting with them, what are they trying to understand? The reality is when somebody reaches out to you with that type of email, they have an objective. There's nothing wrong with having an objective. But typically the objective is one of two things. Number one is they were trying to figure out, can I buy you at a discount? I think your business is worth X today. Can I buy it for less than X? Because if they can buy you at a discount, that allows them to provide a higher rate of return to their investor group. There isn't anything inherently wrong with that. They have a job to do and they're trying to do their best. The second thing that they're looking for is, can I sell this business at a premium if I buy it? On the private equity side of things, the companies that get the top dollar are the ones that have the highest opportunity for organic growth, and that if they had additional capital being poured onto the bonfire that they've already created, the acceleration of that business, the growth, the valuation of that business would continue to accelerate at a faster, more rapid pace. So to bring that full circle, the person emailing you, if you take that meeting, they're looking for one of two things. Do I think that I can buy you at a discount? Or number two, do I think that if I was able to acquire you, you are the type of CEO and operator that could take this business to the next level if you had growth capital behind you? You're probably thinking, how did my friend fall into camp number one, which is not understanding the value of his business? Well, the main factor was not understanding valuations in his space. When you hear valuations, I'm going to give you the most simple definition I can. It's going to be your EBITDA, which is earnings before interest, taxes, depreciation, and amortization, multiplied by your multiple. In this case, he was offered a 5 multiple and his business had $4,900,000 of EBITDA. So if you take 4.9 million and we multiply it by 5, that's going to be what gives us the $24,500,000 we referenced previously. But what he didn't quite realize is his multiple is actually a lot higher than that. Before we talk about how to understand what your multiples should be, let's do a basic outline of how do you calculate EBITDA. This is a very big misconception out there. Very few people actually know how to calculate it when you hear that. EBITDA oftentimes is used as a synonym for net operating profit. Think about it as the amount of money that's left over in your business that's true profit at the end of the year. But the way that it works is there are certain things that get added back to your profit. And an add back is a good thing. It means that it boosts your profit even higher. So let's look at an example here of that $4.9 million of EBITDA we just referenced. First is that profitability number, which we're going to assume is $4 million in this example. Then what we're going to do is we're going to have our add backs. So interest, taxes, depreciation, and amortization. So interest, we're going to assume is $100,000. Interest is going to be interest that you pay out of your business for loans, things of that nature. Second is taxes, which in this example is $500,000. These taxes are going to be taxes that the business actually owes. So in this case, it's a C Corp. The business actually pays taxes. So we need to add back those taxes to our profitability. Depreciation, this is going to be things like trucks, buildings, things of that nature. And we're going to assume it's $200,000. And then amortization. I want you to be thinking about amortization as things like trademarks, patents, And in this example, we're going to use $100,000. So if we add those all up, that gives us our 4.9 million. Make sure you understand that as a business owner to not fall into this trap. The difference between what is my profit in my business and what is EBITDA. Now let's get back to my friend. $4.9 million of EBITDA. He sold at a 5x multiple, $24,500,000. Great outcome. But where's that $13 million I've been referencing across this entire video? Well, what he didn't realize is that he had an amazing opportunity in his business. He was 1 year, maybe 2 years away, having what we call multiple expansion. So in the private equity space, what we find is that smaller companies have lower multiples and bigger companies have larger multiples. So in this example, a $4.9 million business sold at a 5x multiple. But a $6 or $7 million EBITDA business in his same market is going to sell at 8, 9, 10 times. The one thing that he wasn't told, and the folks in private equity aren't going to tell you this, is how close he was to that 8, 9, 10 times multiple. He had 2 or 3 really large deals lined up in the pipeline. If he just kept things status quo over the course of the next year, he was going to end the year at roughly a 6 million EBITDA range. He was going to be able to sell the business for roughly 8 times. Now, how much did this multiple expansion really cost him? His multiple should have been somewhere between a 7 and 8 times. So for the sake of getting to our $13 million number, let's assume it was 7.65, somewhere right in the middle of our 7 to 8 times multiple. If we take our 4.9 million, we multiply it by 7.65, that is going to give us $37,500,000, roughly $13 million more than what was received. Now that I've revealed that $13 million mistake, you're probably thinking, well, what should I do with this information? And the reality is, there's one basic thing you need to be doing, which is getting educated so you are on the level playing field with the buyers of your business. And if you don't feel educated around selling your business, that's okay. This is for first-time business buyers, and if you haven't gone through the process, it can be super intimidating. If you have questions around selling your business, what are the first steps? What are things that I should be thinking about in my business today if I'm selling today or in the future? There's a link in the description below. Feel free to schedule a time with me. I'm happy to walk through the ins and outs and share with you my experiences helping entrepreneurs sell their business. If you haven't already, please subscribe to the channel below. I'm going to be putting out more and more content just like this for business owners looking to sell their business.